possible we are. It's possible we're not. We're going to have a magnificent conversation today. And it's going to be about bank trading. But before we begin, I'm just going to make sure that we're actually live, you know? Just make 100%, 1,000% sure, because, well, you know, I like to actually make sure. So hello to you if you're joining us today. Nice to see you here. Looks like I'm all connected here to the interwebs. And if you're joining me live, I'm running the camera by myself today, so it could be a little bit of an interesting experience. We're going to talk about bank trading today, which is a super interesting topic for a lot of people. Oh, look at this. We may actually be live, but not have any audio. Oh, that's good. All right, well, as we go live here, just let me know that you can hear me okay. And if you can hear me all right, that would be absolutely magnificent. There's a lot of talk out there and a lot of people that discuss or propose to teach you that you can trade like a bank. And I'm going to suggest that there's a way to do it that maybe most people don't talk about. And I'm glad that we can hear. Thank you, Joel. I really appreciate that. Good morning from Conroe, Texas. I'm Rob Booker. This is the daily webinar on YouTube. I am, like I said, I'm running the show by myself today, and it's going to be a little bit of an interesting experience. And I'm going to see if I can flip this around and get this ready. I can. All right, we're going to broadcast straight here to the old Chromebook this morning. And I think this should work. Get a nice little blue color here, preview this to the program, and go live on my desktop. It looks like that's working. Okay, bank. Oh, that's really that's not going to work. Let's do bank trading. Okay, a lot of people propose that they're going to teach you how to trade like a bank. And I'm going to suggest that there are some principles at work here that help you actually trade like a bank. And they're not the same principles that maybe a lot of other people would talk about. So when people talk about trading like a bank, what most people talk about is there are supply and demand levels. And there are some really big name trading education firms that would propose to you that they can teach you how to draw basically support and resistance, and that's trading like a bank. And my first proposition, or my first suggestion, is that I could introduce you to Jason Smith in my family of lifetime traders, and he can draw support and resistance better than almost anybody I've ever met in my life. That doesn't make him a bank trader. I think it makes him one of the best traders I know, but it doesn't make him a bank trader. I could introduce you to Joel, who's here on the live broadcast. Joel's one of the best traders I know. He's one of the most intelligent, creative, skilled traders that I know. Doesn't make him a bank trader. What I want to suggest is, as we talk about bank trading, I don't want to suggest to you that bank trading is something that you necessarily even want to aspire to. It's not necessarily even something that you necessarily even need to know how to do. But if you do want to know how to do it, I'm going to suggest to you that this is how you do it. Sean Campbell, a friend of mine, wrote a book called Inventory Trading a few years back. I was the editor, and he wrote the book. I need you to learn and remember the word inventory as we speak today. And then I want you to also remember the word warehousing. And Joel, I'm going to keep our chat open. And if you need to tell me anything during the webinar here, I'll just be on Telegram Messenger. I need you to also, if you're watching today, remember the word warehouse as we talk about bank trading. So picture in your mind a giant warehouse, you know, with those big doors where the trucks back in. So here's a truck. It's got some wheels. And then, okay, so you got in your mind a truck, a warehouse, and the word inventory. If you truly want to trade like a bank, oh, and I want you to learn another word, specialization. These are all the words that I would want you to know. Thank you, Joel, for being here. It's a wonder that we've even gone live and that this is even working and that you can even hear me. Okay, so remember these words. So step one, you will specialize. You want to trade like a bank trader? You're going to specialize. You pick an instrument and you're now going to be on that desk. Remember that floor traders or desk traders, who are also in some cases salespeople at the desk or floor traders in the pits, remember that they specialized in financial instruments. You know, there are two women, really smart people, not just women, but there aren't a lot of women, unfortunately, in this industry. But Wendy and Liz, I think are their names, on Tasty Trade. Now, I don't watch Tasty Trade, but I did meet them in person. And Mark Sebastian, another former floor trader, introduced me to them. And they are former floor traders from like the SIBO or whatever. And they used to specialize, I can't remember, was it Oracle or Hewlett-Packard or whatever. They used to specialize on the floor on options on those stocks. I remember going to a major investment bank, Deutsche Bank, I'll just tell you who it was, and I remember that each of the traders at the desk, they each had their own desk and they were sitting there. This guy was a Euro trader, this guy was a Swiss franc trader, this guy was a British pound trader, or floor traders were specializing in HP options or whatever. But they picked a financial instrument and they specialized in it. And this is the first thing that I want to share with you, is this concept that if you want to be great at something, you're going to learn to be good at it. And then you're going to learn to be great at it. But you're not going to switch what you do or change up what you do or do 50 million different things. You're going to learn to do great, and you're going to learn to become great at one thing, and you're going to specialize. So the first thing that you would do is you would specialize. And I'm just going to give you an example of this. I'm going to give you one example from the stock market. I'm going to give you one example from the currency market. So if you like options or you like stocks or whatever, we're going to make you a specialist in Tesla. And if you like currencies, I'm going to make you a specialist in the euro, and in particularly, I'm going to make you a specialist in the euro US dollar. So that's your choice. And once you've made that choice and you're sitting at that desk, that's your job. That's your one job. That's the one thing that you're going to do. And you could consider yourself hired to only specialize in that financial instrument. Now, this is what you're going to do while sitting at the desk. By specializing in Tesla or the euro, you are going to amass an inventory. I know this is going to strike some people as absolutely ridiculous, but I'm 100% sure that, I mean, you could follow the instructions in this video alone and something magical could happen in your trading. Because you are specializing in a financial instrument and you are amassing an inventory, your job is to buy low and then warehouse it. What this means is you're going to buy the euro, and you're going to be on the buy side only. You're only going to buy euros. That's it. You're no longer going to speculate on the price of the euro falling, or you're only going to buy Tesla in small amounts, or if you're a dummy, large amounts. And then you're going to put it in the warehouse. And of course, your warehouse is actually your trading account. Now, I'm not saying this technique is for everyone. It's not necessarily for my friend Joel. It's not necessarily right for my friend Jason Smith. I'm just saying, if you want to do it, here's how you do it. And you're gonna warehouse this financial instrument, and you're gonna buy it in waves. You're gonna buy it and you're gonna put it in your inventory. You're gonna buy a little bit at, let's say that the price is 100, then the price drops to 90, then the price drops to 80. And you're going to buy a little here, a little bit here, and a little bit here. Now your job as you bring it into your inventory is to prepare to sell it and sell off your inventory. So that's number 3 on the list. Clear your inventory. Or as Sean Campbell said in inventory trading, turn it. Turn your inventory as often as possible. That means if you've made 0.5%, 0.2%, 1%, 2%, you're going to clear your inventory out. And your entire job as a trader is going to be to bring things into your inventory and then get them out of your inventory. So let's say that you specialize in the euro. I'm actually probably going to start up an account that does this. I may even teach a class about this if anybody cares. You're going to bring stuff into your inventory. So let's say I'm a specialist in the euro, and I'm going to think of the daily range for the euro. And when it gets to the bottom of its daily range, I might pick some up. If the euro is going up all day long, that would be a day that I'm clearing out my inventory and offloading it onto other people. On days where the euro is falling, or weeks where the euro is falling, or months where the euro is falling, like it has been lately, I would start accumulating and bringing stuff into my inventory. I'm going to prepare another diagram sketch here, and I'm going to get to the heart of the issue. And I think this is really important, and it's something that most people never take the time to learn. You could specialize in two currencies or two stocks. You could be on the buy side only, and you could set a goal to turn your entire inventory every 7 to 10 days, and you could make 2 to 5% a month for the rest of your life. Now, I know that this sounds, like I said, this sounds absolutely ridiculous. However, it's totally possible. You would watch for, and here's a list of things you might watch for. You might watch for the RSI on the 4-hour and the daily to go oversold. You might watch for fib extensions. I might even do a little member video about this. I might even do a little member video about this today or tomorrow. Fib extensions, when it drops into these extension areas, you might accumulate a little bit or pick up a little bit. You might use Bollinger Bands with really, really long-term settings like 800-2, 400, (3) or whatever. You might use those fib extensions. And you might use these techniques. You might take any tool in your toolbox that you can think of. You might wait for a downward spike after news. And your goal is to accumulate stuff into your warehouse or your inventory and sit on it. Now you're going to have to keep your trade size small because you're going to have to keep it in your inventory. You're going to have to, you can't blow your entire possible amount of capital in a short period of time. And your job is just simply to turn over that inventory for small gains. Some of you may say, well, that sounds a lot like martingale stuff. That sounds really dangerous. That sounds like holding on to a loser. What do you think a bank does? If you look at the COT report, the Commitment of Traders report, there are speculators and there are commercials, or whatever you want to call them. And on the bank side of this equation, as the euro has been dropping, and you can just see it in the Commitment of Traders report. You want to look the last one up, I guarantee this is true. The institutional money has been accumulating euros as it has been dropping, because institutions must be the other side of the trade. So Deutsche Bank has to be on the other side. There has to be a final resting place for all the trend traders. For all the trend traders that have been selling the euro, they have to get it from somewhere. And they're getting it from an investment bank. And that investment bank ends up warehousing all of this euro stuff. That's where it ends up. And eventually, as the euro begins to climb again, these investment banks are going to get their traders. This is, for those of you that are under the age of 30, this is a telephone. They're going to pick up the telephone, ring, and they're going to call their customers and offload euros as it rises back up. And then the whole process is going to begin again. If If you want to truly trade like a bank, you're going to think about warehousing and inventory and getting things at the lowest price you possibly can. Accumulating, sitting on top of a position, turning over inventory. You could try to turn your inventory over every day, but it's not going to work. That's just short-term day trading, and that's ridiculous. I'm talking about something a little bit more longer-term, position trading. I'm talking about accumulating and specializing. Now, this may not be for you. This may not be the right path for you. But what I like about this, what I even could say that I love about this, is it encourages you to specialize in a financial instrument, become really good at accumulating that financial instrument. My friend Joel, to just give more props to my friend Joel today, has begun the process of absolutely specializing in a financial instrument. And by so doing has enjoyed some recent, I would say, increased success as he tests and builds and specializes. And you start to get a feel for that financial instrument as you are on the desk or on the floor and you specialize in that financial instrument. What did market makers on the floor of the New York Stock Exchange ever really do? They were the buyer of last resort, and when the market was dropping, they would accumulate and then they would hopefully offload it. And they would accumulate and then they would offload. They would accumulate and they would offload. And if someone needed to buy it, they would go get it. And they would accumulate it and then they would offload it. You can do this as a retail trader, but it requires specialization and the willingness to inventory or warehouse your trades. And last of all, and once again, to do this, you need to buy in very, very small amounts. Say if you had a $10,000 account, you might buy a few shares of Tesla at a time in a no commission account like a Robinhood account. Or if you're specializing in the euro in a $10,000 account, you would never buy more than one mini lot at a time. And your goal would be to turn over that inventory for a 0.5% gain as often as you could, as frequently as you could, and you would just keep trying to turn that inventory over. That's what it means to trade like a bank. My name is Rob Booker. I love you all. Thanks for bearing with me as I started this whole thing up by myself. I love you all. I will see you again tomorrow. Thanks for being here, everybody. Bye for now. I'm not really exactly sure that this ended, but I wanted to just make sure that I kept it on long enough that it could end for real. And so I'm going to actually cut myself off from talking, but that's fine. I mean,